What's up? I'm Dan Fredenberg, and this is another Chance Encounter. Hey, what's up? I'm Dan Fredenberg. I'm a commercial real estate guy. I'm from the internet. We're seeing more properties like this being built in front of a house. It's going to be torn down soon. I understand that there are power lines that are getting kind of close. What's up again? This is Dan Fredenberg, and that there is a commercial real estate building. Today I'm joined with Ashton, and is it Levarek? Levarek?
Yeah.
Levarek, awesome. And how are you doing today, Ashton?
I'm doing good, man. I'm doing really good.
Awesome. And I got some great news for you, Ashton. You might not know about this, but today we are joined by my very favorite member of the audience. And why is my favorite audience member here? Well, it's clearly because this is a chance encounter where I talk to commercial real estate players. That means deal sponsors, buyers, sellers, investors, all that kind of stuff, operators as well. And you might ask yourself, why are you going to do that? And the answer is, if you've ever been involved in an off-market deal, the private kind of deal that you're not allowed to discuss publicly, sometimes they're called 506B syndications, well, you know that you need documentation of your prior substantive relationship, or else the SEC will get ants in its pants, and we don't want that. But before we get too deep into real estate and all that kind of stuff, Ashton, do you want to say a thing or two about yourself?
Yeah, sure. Thanks for having me on the show. Always a pleasure. I don't know if you want. I can do my background. I had 21 years in the military. Got into real estate in 2018, and we do a mix between Airbnbs and apartment complexes. And I live in Costa Rica now.
Exactly. Living the dream. And of course that kind of is baked into the motivations, which is the first segment. But before I got to say, but wait, check your eight. And I don't mean that literally, Ashton. I mean, I don't know if you can even do this, but maybe you can see through the camera and down in the audience's, there might be this hideous subscribe button down there, and they should probably do so. Okay, it's a stupid joke, but whatever. The 5 distinct motivations I do in every single episode. The reason is because even though at this point I've already interviewed well over 300 different investors and syndicators and whatnot, I've probably spoken to over 1,000 players in this. Everybody has their own unique why, and it's important to know what it is just to find out if somebody's going to throw in the towel and not see the entire deal through. Because after all, these deals take months to close, they take years to go full cycle, and so it's really important to have that clear in your mind. But even though everybody has their own unique why, I find they fit pretty neatly into these 5 different categories. The first one of which is preservation of purchasing power. What on earth is that? Some people, they are job optional, they can live wherever they want, and the way that they pay their bills is from the proceeds of ownership. In other words, they've got a portfolio, and whatever profits come from that, that's how they pay their bills. And you may ask, if somebody is in that situation, why would they bother doing another acquisition, going through those risks and the hassle? Well, there's a couple scenarios where it's most obvious that they're going to do it. One is if inflation is rearing its ugly head, that's going to eat away from the purchasing power of your cash flow. So it's going to be time to make a new acquisition. But other than that, you're going to be buying when there's distress or an asset crash, so you can buy at a steep discount, which is what everybody ultimately should be doing. You know, you should always buy at a discount. But those are the main reasons why somebody would want to do it if they're in that situation. Me personally, I'm not that far in my commercial real estate journey yet, so that's not my big one. My big one is trading time directly for wealth, and that's because I've got a background in tech. And when you are a high wage, high salary earner and you get your tax bill, you'll notice that you're paying more tax than anybody else. And me personally, I came from the CRM industry, so that's mass emailing, sending out 5 to 7 million emails a month. And I started doing that in 2014 with all of the credit card transactions and online funnels for a guy who was flipping 10 houses a month for years before he hired me. And when I saw how successful he was, I started thinking, I got to pivot where I'm not going after this higher salary and paying more taxes. I'm going for these little slivers of equity in these different properties as a retirement plan. So that's what I'm up to when I'm doing these commercial real estate deals. But I totally understand that a lot of people, especially youngsters, that's too abstract for them. Usually youngsters, they want to hustle like crazy for now so that they can retire early, or maybe they just want to control their schedule. I know Ashton's already done a big chunk of this, so that's exciting that he's already there. But when it comes to taking control of your schedule, some people, they just want to work fewer months per year instead of working like crazy right now and then retiring early. But another thing to add about this motivation, I find, is that a lot of people who want to fast track their retirement, they think that that's secretly everybody's motivation. And I assure you that is simply not the case. There are some people out there that are just plain ambitious. They're after that generational wealth. They want to buy their entire hometown. And the real motivation is to make sure that their great grandchildren never have to hold a day job. And even though that sort of attitude is sometimes vilified in some circles, if you're running a business, you need some people who are going to be willing to hustle into their 90s. And these guys fit the bill for that. So they're great members of a GP team. Just like the last group, even though it's a little bit more subtle and it's not necessarily about dollars and cents, but it does have a dollar and cent component. It's they've picked a sector of society, or maybe it's animals, maybe it's the environment, maybe they want to send people to space, who knows what it is, but they've recognized that there's a financial component to making a really big impact, and that's why they're making their commercial acquisitions. So Ashton, as far as these 5 different motivations, what combination of them would you say describes you best?
I was when I started this, we just wanted to make $10,000 a month so I could retire my wife so she'd be a stay-at-home mom. So it was just the lifestyle, is the freedom, to be able to own my own business, to be able to go be, do, or have whatever I want in life. Because it really came down to my family. And like on one deployment, my daughter literally said, when's dad going to live with us for real? And so that hits hard. So I was getting out of the military and I was either going to get another job that was going to be very similar, where I was gone all the time, or I was going to make my own job, and I chose to make my own.
I love that answer. Honestly, it's something that that time with family, I don't think it's emphasized enough, especially among men in our society. And I was lucky enough to work from home for my kids' entire lives, and like I wouldn't trade that for anything. That it really is a great thing. But of course, when we're talking about motivations, it's really easy to seem overly optimistic or naive, because after all, there's plenty of risks involved. And one of the things that I found, if you've ever been involved in one of these off-market deals, these 506B syndications and whatnot, the securities attorney in the mix, and there should have been a securities attorney in the mix. If there wasn't, you should be running away. You shouldn't be walking away. It's very important because the SEC requires it. But the SEC attorney should have required that everybody involved in the deal fills out this super invasive financial questionnaire. Sometimes it's called a suitability questionnaire. And when I was going through the questions, one thing jumped out to me, which is the tolerance for risk assessment question. I felt that it lacked utility. It didn't really give me an answer that I could use. So I made my own one that I think is a lot more informative. It's a fill in the blanks question. It is. There are many popular investment asset classes, but I think blank is too risky. So Ashton, it can be inside real estate, it can be outside real estate, whatever you want. What's too risky for you to invest in?
Anything I don't understand or control. Yeah.
Yep. Absolutely. I'm totally there with you. It's so easy to lose your shirt that way. And it actually dovetails into the next set of questions I have. And just for some background, originally, when I did the first couple hundred of these chance encounters, I didn't include this question because I was aware that some people, they're more like the PR, the public relations role or marketing role. They're the front of house sort of role. And they're not going to be the spreadsheet junkies who really understand how every single number blends into a successful acquisition and a successful business. But even if somebody is just front of house, they're still going to have a few different deal metrics that they hone in on to figure out whether one deal is worth pursuing or not. And for anybody in the audience who is just listening and not watching. I read out all of these 14. It's not an exhaustive list. So some people have some metrics that they rely on more than the ones on here, but here are some common ones. The first one is cash on cash, then IRR, then cost per door, then NOI, which is net operating income, the going in cap rate, which actually is relevant to how much of a discount are you buying at compared to other properties, the going rate in that area. Then there's the loan interest rate, which is especially important if you're assuming a loan. And then you have occupancy, which is the inverse of vacancy, which means it's actually the same thing. Average income where the property is located, the amortization period of the loan, also very important if you're going to be assuming it. The difference between the market versus the in-place rent, the population growth where the property is located, so you have some baked in appreciation. Then there's the sponsor record, which is how many deals have already gone full cycle, how many are on the go right now. Then we have waterfall, split, or exit strategy, which is what happens to your investment after your capital's been returned. Then there's DSCR, which is debt service coverage ratio, which means how much of the revenue from rent goes out the door immediately just to pay for the loan. So Ashton, you're welcome to use other metrics, but what are your top three or something like that?
When I'm looking for someone to partner with or do a deal with or invest with, I always start with the sponsor, then the market, then the asset. And so the asset, a lot of those are how you measure the asset. But I would much rather vet the sponsor. And once I've done that, I can trust his assessment of the asset in the market.
Mm-hmm.
But that's me personally.
Yeah. Oh yeah, I absolutely love that answer. I'm eating it up like a delicious subscribe sandwich. It's very subtle, isn't it? It's you never, it's tough to miss. Anyway, it's my reminder that I need to pull out the Dan Does Deals commercial core competency cube with the 6 different roles in a commercial real estate deal. And I haven't mentioned it yet, but one of the real benefits I'm hoping you'll get from watching this episode is you'll be able to more effectively communicate on the subject of a commercial real estate deal. I think that your future in this industry is going to depend on that ability to communicate effectively. So that's why I pull out this die and this cube and I go through all 6 sides so that way also you know how my guest fits into these deals. And if you're looking at this and going, wow, I really need me one of those. Well, the good news is it's absolutely free. You can go to dandoesdeals.com. There's this big conspicuous looking button. You can click on it and download it. And you can print it out and try it out on your friends and family. But I got to confess, I committed the cardinal sin of marketing, which is you never, ever give away your freebie without asking for some sort of contact information. That's exactly what I did. I just made it so you can just click it and download it and print it out so that you can practice out and there's nothing standing in your way. So let's get started. First, starting with the repositioner role, which is the most public facing. You're more likely to meet a repositioner than any other type of professional in these deals. But a repositioner's job is to find upside. How are they going to do that? Well, first, they're going to be looking at a ton of different properties, doing a ton of paperwork, especially doing what we call underwriting, which is doing the math. They have to figure out, is this property even making the amount of money that the seller/broker claims it is? Because okay, so the repositioner, they're going to be doing that. But one peculiar part of a repositioner's job is they have to have a vast network of financiers. That's the investor relations. These are the different lenders, the people who only deal with the owners of the company, paper and money, and that's it. So they're not on a GP team. The reason why repositioners need to know all sorts of financiers is because if they can secure a more advantageous loan, in other words, cheaper money, that goes straight to the profitability of the building. So you need to know lots and lots of financiers. But of course, the more obvious place that the repositioner is going to look to find that upside is to optimize the operations and stop those Benjamins from going down the toilet. But of course, there's more to operations than just unclogging toilets and collecting rent and mowing lawns or shoveling snow like you'll have to do where I live. And me personally, what I contribute to operations when I'm on a GP team, there's the web-based applications and different marketing outreach in general. But the bigger piece is if you understand that vacancy is the real enemy in real estate, then you have to know that somebody on the GP team, even if you're looking at bigger properties where you outsource the property management, somebody on the GP team is going to need some serious marketing chops to get those units filled if the property managers can't pull it off. So that's where I'm fitting in. But the next place the repositioner is going to look, because there's only so much upside you can find from operations being more efficient, is to get the contractor team involved, to upgrade the property, to make it a nicer place. The idea being that the next resident will be happy to pay more in rent than the previous one, so you've got that baked in upside. But if only it were that simple. You can go ahead and gold plate your toilets, but you're not going to get a return on investment on it. And there are other ways to lose money off of contractors as well, like if they're dragging their feet and not keeping the schedule, they're using subpar materials. So if you're like me, see, I don't know if you know this about me, but I'm from the internet. So that means I need locals. I need boots on the ground, somebody who can be there in an hour or two, because that sure will not be me. I'd still be stuck at an airport in an hour or two, so somebody needs to be able to be there a whole lot faster. But when the repositioner has a property in mind, they've assembled this team and they turn around to the financiers because they got a deal, well, it might be you in this future hypothetical. You know, you're a repositioner, maybe you're an engineer or an attorney or a physician, something like that. And you get the idea in your head, hey, I know how to buy a house. I put down my down payment, I borrow the rest, and it's easy peasy, right? So you turn around with your circle of friends, say, hey, let's throw in 100K each. Turn around to the financiers and say, hey, we want to buy that 350 unit apartment complex over there. It's tens of millions of dollars. Do you have, say, tens of millions of dollars you want to lend us? Well, there's one question that I haven't answered yet that is going to come up. And if you're in a mentorship program or a guru program, I encourage you to listen very carefully to this next part. The financiers are going to ask, who's your sponsor? Who's your KP? What's that all about? You're not going to be eligible to buy a commercial real estate property with a big old commercial loan unless somebody in the fold already owns a similar asset. The idea being you need to be able to prove to the bank you're not just going to run the property into the ground and lose all the depositors' money that's been invested in your loan here. So you need that sponsor, you need that KP, that K principal. You also need a certain amount of liquidity. And then among the team, you need enough collateral so that you've got a balance sheet of at least the amount of the loan. But if you have all those pieces, you got yourself a commercial real estate deal. So Ashton, I know that you're part of the repositioner part. You know, everybody has to have some financier relations, and I get the idea that you sponsor some of your own deals as well. But I don't want to put words in your mouth. What are the most likely pieces of the puzzle you're going to bring to your next deal?
We typically handle a lot of the capital raising, interfacing with investors and the loan. And of course, we're key sponsors on a couple deals as well. So.
I love it. I love it. So that is talking about the different roles. Let's talk about the buy box itself. And when people are asking about what you're looking for, what's your buy box, what's your ideal property, we're asking about three main things. First one's geography. Where is it? Which state? Which county? Possibly even which neighborhood? Okay, that's definitely going to be included for it to be ideal. Second one is size. When you're talking about apartment complexes, and most of my guests are in multifamily, the way that you define size is by the number of apartment units, the unit count. And the reason why it's important for us to know what sort of unit count is because the type of group that's going to take over 10 and 15 unit apartment complexes, they're going to be fundamentally different from the ones that are taking over 150, 350 unit apartment complexes. So that size matters. In other forms of commercial real estate, they may go by acreage or square footage, but the size is going to be important for that same reason. But the last one is usually called class. I prefer the term desirability because I realize that class is two completely separate things. Those are condition and area. When you're talking about condition, it's how old is the property? How beat up is the property? What about luxuries and amenities? Is it a really desirable place? You know, does it have lots of reasons why people want to live there? That's the condition. But when you're talking about area, especially if you're talking about some sort of residential, the important parts, one is the school districts where the property is located, but it doesn't matter what kind of real estate it is, the crime rate is going to matter. And then there's that old trope that brokers like to say of location, 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 which I actually think means traffic, traffic, traffic. If a gazillion people pass by a property every single day, it's going to have more baked in desirability just for that reason alone. But both the area and the condition are ranked the same way as in grade school, where you have A plus at the top, then A minus, then B plus, and so on. So Ashton, as far as your buy box goes, what's easiest to say yes to?
Again, we start with sponsor, but we like stuff along the Sun Belt, places that have high rent growth, high job growth, population growth. We look at B and C class properties that have value add potential, typically built within the last 30 years. And as far as size, we typically do 50 unit to 300 plus units. We've done as big as 384 units. So we like the bigger ones, obviously. It's better economies of scale. But we're doing a 48 unit right now because it fell into our lap. So
I love it. I
yeah.
love it. So let's talk about people then. It's honestly my favorite part about commercial real estate. It's people are so eager to collaborate, whereas in other industries, that motivation isn't there. I personally chalk it up to the fact that it's multifaceted. The fact is, nobody's going to be all six sides of the cube for any meaningful amount of time. They're going to hunker down on a couple sides or something like that and get really great at those. But at the same time, because we all have our own unique skill sets, even when we're making these different introductions all the time, building teams that we're not even part of, we're still going to be better suited to help some people more than others. Me personally, because of my marketing and tech background, I need to collaborate with people who already have an established business. So the sponsors and KPs, I'm always interested in speaking to. And of course, we're ultimately in the industry of deploying capital. So financiers are important. And then being from the internet, the locals are also important for that reason as well. But Ashton, I don't know if you have any 506B deals. Don't go mentioning those because the SEC will get ants in its pants. But which roles are you best suited to help? Who are you looking for?
Probably probably the investor relations, honestly, and then building partnerships and teams. I think a large part of our business is more focused on building teams than anything else, and a lot of people miss that in the beginning.
I love it. I love it. So
Yeah.
then the question has to be how to reach out. And me, I'm lucky because I got this really distinct last name. Of course, yours is right up there too, but it means that I'm very easy to find online, especially on LinkedIn, which is the social media platform where I spend most of my time there. But, and of course, I also have some books available on different business related skills available on Amazon.com, including the one on real estate. But if you are going to be involved in syndication, if you're taking on investors, capital raising, anything like that, I highly encourage you to scan this QR code. You can pause the video if you need to, but that brings you to the FAQs page of 506BME, which is the platform where I offer to help with your backups and your infrastructure for documenting your substantive relations. And the idea being is if your laptop falls into the bathtub, well, the SEC is still going to require the documentation of your substantive relationships, or else they're going to assume that it just never happened. And that's bad news. But Ashton, if people want to reach out to you, I know that you're active on LinkedIn, but maybe there's a website, phone, email, something like that. That's better. How should people reach out?
Yeah, we're on LinkedIn, Instagram, TikTok. We're on Facebook. We're on all the social media pages, but we also have a website, www.valkyriegroup.com. We have a bunch of free resources there, including two books, as well as the Vacation Rental Millionaire Method, which is a book we wrote last year to help people quit their day job in under 12 months through using vacation rentals. So there's a lot of information there, but yeah, whatever platform you use, you can find us find me, Ashton Levarek, or Valkyrie Investment Group.
All right. I love it. I love it. And that brings me to the last part, which is the public service announcement. It's actually not for you, Ashton. It's for you in the audience. And it is, if you've been watching this episode and experiencing like pains, like searing pains in your eyeballs and like migraine like symptoms, I'm really confident it's because of the hideous subscribe button that's just down there and you can get rid of it for free. And full disclosure, the reason I keep bugging people to subscribe is because if enough people do, then YouTube will actually start to pay for these videos instead of me. And I think that would be amazing. And the trade-off for you, just so we're clear, again, it doesn't cost you anything, but it means that my videos may show up on your list of suggestions, but you can go ahead and ignore those suggestions because quite frankly, I just appreciate the fact you spent this time with me. Just like Ashton, I appreciate you joining me. This has been great.
Thanks for having me, Dan. It's been fun.
Awesome. Thanks. Hey there. Are you interested in commercial real estate deals? Would you like to build your network of investors and deal sponsors? Well, the best thing I can do for you is have you appear on a chance encounter interview as featured on dandoesdeals.com. You may know me from 506B Me or as a top commercial real estate voice on LinkedIn. And if I had to think of the top factors in your success in commercial real estate, my top two would be your network and your ability to effectively explain how deals work with effective communication. The 15-minute chance encounter format, it checks both of those boxes, and they ensure that you can share your private deals with me without the SEC calling it a public solicitation. So hop onto LinkedIn. You can see my name is over here, Dan Friedenberg, and search for my name. And the best way to reach me and book that is to message me through LinkedIn. And don't worry, it doesn't matter if you decided to enter this space just last week or 2 weeks ago, or if it was decades ago. It'll be fun and easy to look good. We're just asking multiple choice questions based on your core competencies you look to contribute, your level of sophistication, and all that kind of stuff. So I hope to hear from you soon. Thanks a lot. Bye. Make sure you 506B me. Any syndicators, make sure you 506B me.
Hi.
Oh, hey, yeah, here's my code. You got your QR code scanner? Okay, yeah, oh yeah, just hold it right in the square there. Okay, cool. And now you hit open in browser.
Okay.
Okay. Are you already logged into 506B Me?
Yes.
Yeah, okay, cool. Yeah, so there's my video. So now I'm already on your watch list. So when you get back to your hotel, you can find out what my core competencies are and my level of sophistication. Sound good?
Yeah.
I love your hat. Real estate's a scam. That's really funny.
Yeah.
Nice meeting you.
You too.
506B Me, everybody.